Welcome back to the channel. So today I'm going to be going over the first video of a mini series where I go over some examples of how to create stock portfolios with a certain goal in mind. So today is going to be all about dividend growth stocks. And in this video, I'll kind of explain my thought process for creating the portfolio, and hopefully you can take some of what you learned in this video and apply it to your own portfolios. So I decided to go with 18 different companies. Generally, I try to aim for 15 to 20 companies in a portfolio. That way you have a good amount of diversity in the portfolio while not having an overwhelming amount of companies to keep track of, since you should be staying on top of every company that you own in terms of making sure that they're still on track to do everything they set out to do, and that the company is in a generally good position financially or in their industry. There are some general portfolio strategies that are out there. One suggestion is to hold 20 companies and have them all weighted at 5% of the portfolio. And that way you're not relying on very few companies in the portfolio to kind of keep everything together. It's evenly weighted. But for me personally, I like weighting some of the companies that I like more and think have a better chance at succeeding, and that's just how I do things. If you're more comfortable with evenly weighting your portfolio, then by all means go for that strategy. So all of these stocks, I try to make sure that they all follow the rules that I personally invest by when choosing dividend stocks. If you're unfamiliar with what those rules are, then you can head over to the other video that I made where I explain how to choose good dividend stocks. Hopefully that will help you kind of decide which companies you want in your portfolio. So the first thing I did was look at all the different sectors and chose the ones that I thought would be nice to hold in this portfolio. So as you can see in the bottom graph on the right, I have stocks in the financials, technology, utilities, consumer discretionary, healthcare, REITs, consumer staples, industrials, and telecommunications. After I decided which sectors I was interested in, I went in and chose my favorite companies in each of the sectors, and that's how I ended up with this portfolio. I also tried to get my average dividend yield of all of the companies to between 3 and 4%. 4% was my goal initially, but some of the more heavily weighted stocks have lower dividend yields, but they also have a lot of room for growth in both the dividend and capital appreciation. So I don't mind taking the lower dividend yield in those cases. So as you can see from the list here, I have TD Bank, Royal Bank, Microsoft, Apple, Procter & Gamble, Johnson & Johnson, Visa, MasterCard, Brookfield Renewable Partners, Disney, Home Depot, JP Morgan, Fortis, Merck, Waste Management, Realty Income, Canadian Apartment Properties, and Bell. I think all of these companies are very strong in their respective industries, and I think they all have good long roads ahead of them, and I would be comfortable holding all of these in this portfolio. So when I'm making a portfolio, I try not to overly weight either a specific company or a certain sector. This portfolio is a little bit more heavily weighted in the financials, which if you look at how the Canadian stock market is, the financials definitely are a big part of the economy, and some of our largest companies are financial companies. So I kind of took a similar route. The financial sector is just under 34%, which is a little on the heavier side, but it's not overly heavy, especially if you consider that there are different industries within the financial sector. So within the financials, we do have the banks. I have two Canadian banks, TD and Royal Bank, and then an American bank, JP Morgan. And I also have two credit cards. So those would be in a different industry as the banks. And those are Visa and MasterCard. And together they make up the big chunk of the financials as you see there. While this portfolio is a little bit more tailored towards Canadian investors, the thought process and rationale can definitely be applied to an investor from any country. So the important things to keep in mind would be to consider which sectors you're interested in, to look at good dividend companies within each sector. Don't give either a sector or a specific company too much weight in your portfolio, and try to keep track of everything that you hold and make sure that the companies are still being run well and that they are paying dividends if you are deciding to go with a dividend growth portfolio. I'd be interested to hear your thoughts on this portfolio, how it compares to your portfolio, and if you would change anything that I hold here. I also think it's a good idea to create spreadsheets of your portfolio to help keep track of what you're holding. You can use different formulas to pull down the stock price of each company. That's what I have here. If you're interested in this kind of video, I'm planning on doing a similar video showing growth stocks. If you're interested in more details regarding choosing companies for these portfolios, then let me know in the comments and I'll try to do that for the next one. And if this video is helpful at all, then subscribe and like the video, and hopefully I'll see you in the next video. Thanks.